In today's world, global financial markets have become more interconnected than ever. To help investors capture growth opportunities in the global marketplace, Citi Investment Strategies introduces the Citi Flexi-Beta 5 Excess Return Index, providing exposure to a diversified universe of assets across global equities, government bonds, and commodities. These assets fit within a core allocation and a reserve allocation. The core allocation provides a diversified basket of equities, government bonds, and commodities in developed markets. The reserve allocation only provides access to government bonds from developed markets. The core allocation has the potential to provide attractive returns, while the reserve allocation is perceived to be less risky than the core allocation. The index seeks to adjust its allocation dynamically by considering two signals: the trend signal and the risk signal. The trend signal measures market trends to determine whether the performance of the core allocation has trended positively or negatively. The risk signal is based on the Citi Risk Aversion Indicator, which attempts to measure the general market's perception of macro risk aversion by tracking the levels of 6 financial market sentiment indicators. Based on the two market signals, the index will determine its exposure between the core allocation and the reserve allocation on a weekly basis. When the trend signal indicates a positive market trend and the risk aversion signal is low, the index will allocate 100% exposure to the core allocation and none to the reserve allocation. When the trend signal indicates a positive market trend and the risk aversion signal is high, the index will allocate 25% exposure to the core allocation and 75% to the reserve allocation. When the trend signal indicates a negative market trend and the risk aversion signal is low, medium, or high, the index will allocate either 25, 50, or 100% exposure to the reserve allocation. To stabilize global market uncertainties that may negatively affect the index return, the index applies a daily volatility target mechanism, which attempts to limit its volatility to a predetermined level of 5%. In summary, the index seeks to deliver stable long-term returns by systematically adjusting its asset allocation in response to changing global market conditions. For more questions on the Citi Flexi-Beta 5 Excess Return Index, please ask your financial professional or find more information at investmentstrategies.citi.com/index.